Hello and welcome to this Edison TV executive interview. Today we are speaking with Sebastian Grabmaier, Chief Executive Officer of JDC Group. JDC Group is a German-listed fintech platform group focusing on bank insurance products. We are going to be focusing on the impact of artificial intelligence on the insurance sector and JDC Group in particular. Sebastian, thank you very much for joining us today. A first question, maybe to get to a general start. Can you give a short description of what JDC does and how the business model works?
Yes, sure. Great to see you again, Edwin. JDC is a typical platform company. So we are one tech platform that brings together the insurance companies in Germany and all kinds of intermediaries. So we take in the data of more than 250 insurance groups, all the mortgaging banks, the investment companies, investment platforms. We standardize the data, we process it, and we make it visible in our systems and also deliver the data up to the systems of our intermediaries.
Okay, so in short, people buy insurance through, for example, a broker or a bank. These insurance policies are processed on your platform, and JDC earns a commission on this. And banks and brokers, they are willing to pay you a part of this commission because of the platform function with the insurance provider selection, services, administration, etc., etc.
Yes, thank you. And thank you for clarifying, Edwin. So yeah, the core is a B2B2C model. That means there is about 16,000 intermediaries using the platform. And if a customer takes out insurance, pays the premium, the insurer then pays a part of the premium as commission to the platform. On average, that's 40 euro per piece of insurance. So we take in the commissions, we deduct our 10 euros, and then we pay 30 euros on average to the intermediaries. That gives us the customer for free. So the good side is we do not have to pay anything to acquire customers because that's delivered from all these intermediaries in the market. But then we split the commission, and so we don't have any marketing expense to grow in this model, and then just have to split the commission after. So our top line is the commission in, and then if you want to compare us with a software company, then it's commission in minus commission out. This gross margin line, that's basically the part where we can deduct costs off and then make earnings off.
Get to the profit. Okay, very, very clear. Artificial intelligence is the hot topic at the moment and seen as a disruptor to many sectors. How do you think AI is going to impact the insurance world?
Yeah, we definitely think that AI will be the biggest change and innovation in the market since the internet. But also, this a little bit overstated. The effects will not be that intermediate, right? When this small startup, Insurtech, came along and introduced a comparison tool to compare 3 different car insurance carriers and then click out the customers to some US insurer, that gave quite some hit to all kinds of intermediaries, also insurance companies in the worldwide market. Whereas we think that this is just a technology that we use for 15 years. Today, JDC is not only comparing car, but all kinds of insurance products of all insurers in Germany. And with our in-house comparison platform, Morgen Morgen, we are market leader in comparison tools. So the normal way in Germany now is that all customers, all brokers, all intermediaries, they compare first and then offer their clients a product. And there's a lot of, it's a scared trade, as the US says. So there's some anxieties of how AI is really influencing the market. And then there are some studies that say that up to 45% of all sales could be done by generic AI agents. So, but there is some truth behind it. Even if this is the case, we as JDC, we would be like a very big beneficiary because there's 3 things needed to really use AI. Number 1 is data, number 2 is infrastructure, and number 3 is customer access. So if you use an AI tool, also the best large language models on a worldwide data set, you will see that results are pretty poor, right? Just search for a credit card or the best insurance contract. And if you don't tell the large language model what market you're in, what specific risk you want to cover, what's the data you're relying on, then the answers on the prompts are just very poor and not really easy to use for a client, and also not for an intermediary. So you need the data to really use an AI tool. And the second is, even if the AI tool is then talking to customers or communicating with the customers, and then or even buys the piece of insurance, then you need an infrastructure, so a platform to transact. And finally, right, you cannot use AI before you have customer access. And all these three, data plus infrastructure plus customer access, is on the JDC platform.
Yeah, you already touched upon it a little bit. Huh? So you've seen in the stock market already that shares of platform companies have taken a hit from the development of AI, and AI is going to take over their role. That's the fear. You see it otherwise, right?
Well, same happened to the software companies. Most took a hit of about 30% of their market cap. Same with the intermediaries, both insurance or stock. But I think on a short term, the contrary is the case, because the ones who can benefit from the developments are the ones using these AI tools. And that's not the general public first, but it's the software companies being more efficient to develop software faster and more to the point. And same goes for intermediaries. The ones, it's not the competition AI against intermediaries. It's AI. It's intermediaries using AI versus intermediaries not using AI. And we see that our internal processes already are becoming way more efficient. And when you look at our platform, then you can see that our growth is roughly 15% per year, and our HR costs are just going up 2 to 3% a year. And the answer is yes, AI is enhancing our skills and also our efficiency to gather the data. And we can already use a lot of HR and a lot of personnel in other fields, because AI is replacing normal service employees. So so my prediction is that AI will first benefit all these bigger platform software companies, and only maybe in the far future there will be AI tools that can then maybe replace some of the smaller intermediaries, but not the big platforms. Because again, right, you need these infrastructure platforms to transact, if you are a human being or an AI agent. And this is what we're looking forward to, because we will be very happy to do all the transaction business for these new in the end it's customer interfaces using these new AI methods.
To summarize, you can use the AI to streamline your own processes. So that's something that you're working on. And the other side is in the market platform businesses, the large one like your own, that's probably going to benefit from the development.
Yes, correct. That's the easiest use of AI is basically if you have back office work, like there's some stupid standard work streams, such as taking in data or comparing data or checking the quality of data. AI tools are very well fit to do that already, and we use our first AI tools for the last almost 2.5 years. So also here we're front runners, and now when the AI development comes to the customer front end, there is way more benefits. Right now, at least in German language, the AI agents are pretty poor still. Right, if you call whatever one big insurance company or big airlines, whatever you get back as an AI interface, that's still pretty poor, and you have to rely on a human being on the phone or in the service centers. But this will change dramatically, and for us, that has a lot of opportunity in there, because we will be able to contact many people. Right, we will talk more about FMK, our news acquisition, but for us, it was quite expensive to contact our customers outbound. but using now the first really usable AI bots, this will not be a problem in the very near future.
Now, clear. You already touched upon it a little bit. The other way to benefit from AI is, of course, in attracting new clients. The acquisition of 60% of FMK probably fits this profile. Could you tell more about how FMK helps to source these new clients and get new contracts on the platform?
Yeah, that's the so we like this B2B to C model that we are running, because obviously there is no big advertising costs, there's no acquisition costs to get access to customers, but we are always depending on the speed and the performance of our intermediary clients. And the acquisition of FMK changed this dramatically, because this is the fastest growing customer acquisition platform in the German financial market. So they acquire 40,000 customers, and that's not leads, but customers signing contracts every month. So we expect them to provide new, so we now own 2.5 million customers on the platform, and they will provide another 500,000 customers every year. And until now, for them, it was prohibitive for small companies to contact the customers individually after they signed the contract. So they were running a click out model where they sent them to the product company, insurance company, credit card company, bank, and then they just used anonymous data, because they did not really have the tools to contact these customers again. But now, very soon, these AI agents and bots, they will just allow us to call 40,000 customers in a minute, right? So we can contact all of them and try to cross-sell, upsell them. And that's very new development to our platform, right? And secondly, the big question was still in AI, all these ChatGPT, other large language models, how would they change the use of Google, right? And there was a lot of hysteria whether Google would have to go to the market because nobody's Googling anymore, but everybody's using Chatty. And the answer is that Google figures go up because these large language models make people use more internet. So in the past, maybe 50% of the clients were in the internet and then came to a human broker or agent. Now it's more than 75%. So the internet is becoming more important as a sales funnel. But then within the use of these large language models, it will not go to licensed systems, because most of these clients and consumers will use free models, right? So they will have more than 3, 4, 5 apps using AI on their smartphones. And then whenever the free period, let's say 3 prompts or 4 or 5 prompts is gone, they would go to the next systems. So they're not open to pay a monthly license fee. So same as in the development of Google, we are quite certain that it goes to advertising, and we can see that every single of these systems, and even ChatGPT was the last to allow now advertising on their platform. This only started now in the US. This we can see with other models like Copilot or Bing. They already use advertising and offering advertising space under the answer of the prompt. And the good part of this is that the conversion rates are there much higher than on Google Ads, right? Because if you buy the advertising space right after the answer, let's say a customer says, "What's the best credit card in Germany?" and asks ChatGPT, and then under the prompt, that's not really helpful, because now ChatGPT until now doesn't have the right data bank to really tap into. You have an ad that says the Institute for Consumer Confidence tells this is the best 5 credit cards. Then people are way more likely to click on this ad. That's 80 to 150%. This makes the advertising spend and the return on this advertising spend 5 times higher. That's our news figure. So that means this is way more attractive than Google Ads until now. And we're really looking forward to the introduction of ad space in all of these large language models.
Impressive. So this wraps up our interview. If our audience would like to see more, please visit our website at edisongroup.com or under the IR section of the JDC corporate website. Thank you very much, Sebastian.
Thank you, Evan.